Welcome to CBT News with Shyann Malone.
Good morning and welcome to the CBT News Daily Newscast. I'm Shyann Malone. Thanks so much for joining us today. And now, here's today's top stories.
Thanks, Shyann. On today's show, we're joined by Jonathan Smoke, Chief Economist for Cox Automotive. But first, Cox Automotive forecasts a 6.2% rise in December new vehicle sales over last year, with annual sales rate of 15.1 million, marking a slight decline from November, but a notable improvement from 2022. The U.S. auto market is expected to sell 15.5 million units in total for 2023, an 11.6% increase from the previous year, led by strong performances from brands like Honda, Nissan, General Motors, Tesla, and Hyundai. Despite challenges from high vehicle prices and interest rates, inventory levels and fleet sales improved in 2023. Next up, as of January 1st, 2024, new U.S. battery sourcing rules have resulted in many electric vehicles, including models like the Nissan Leaf, Tesla Cybertruck, and Chevrolet Blazer EV, losing eligibility for up to $7,500 in tax credits, according to the U.S. Treasury. The change, aimed at reducing dependency on Chinese supply chains, cut the list of qualifying EVs from 43 to 19, Reuters reports. Manufacturers are adapting, with some vehicles expected to regain eligibility under new regulations. In other electrical vehicle news, China's BYD outsold Tesla in the final quarter of 2023, selling a record 525,409 battery electric vehicles. Yet Tesla maintained its annual lead with 1.8 million cars sold, compared to BYD's 1.57 million. China's rapid transition to electric vehicles, backed by strong government support and targets for new energy vehicles, has fueled this growth. Over 30% of China's total car sales in the first 11 months of 2023 were new energy vehicles. Don't go anywhere. Coming up next is Cox Automotive Chief Economist Jonathan Smoke, who discusses 5 trends all dealers should watch in 2024. We'll be right back.
Well, if you're not already subscribed to CBT News, now is the perfect time to do it. For over a decade, CBT has brought you exclusive and in-depth interviews with dealer principals, OEM executives, industry analysts, and top-level sales and management trainers. Join the thousands of automotive professionals that rely on CBT News for the insights that drive profits and maximize the bottom line. Subscribe today.
With 2023 in the rearview mirror, people are anticipating what the new year will bring. But before we talk about 2024, how would you characterize 2023?
Well, certainly we're happy we avoided the recession. You know, a year ago, that was a lot of focus.
Close. Yes.
And I believe dealers navigated another abnormal year. You know,
Yeah.
We've had 4 years of extreme changes, and some of which have been new changes reacting to the changes we had the previous year,
Yeah.
and dealers successfully got through another one. I dare say for most, they're third most profitable in history, so not a bad one. But there are aspects of that sort of lay the table for the year ahead too.
Mm-hmm.
So, you know, what was a big surprise last year was new vehicle sales surprise to the upside.
Yeah.
We were off by more than 1 million in terms of where the market actually ended up. And some of that was because we believe there might be continued supply chain issues. And by the time we got in the second half of the year, I don't think a single OEM was really having challenges the way that we had seen before.
Sure.
And most importantly, we saw the end of any concept of manufacturers being disciplined and keeping inventories lean and incentives low.
Mm-hmm.
So that played a big role also in the success and declining margins that dealers have experienced this year.
Sure.
And I'd have to say, as an economist, I'm always surprised by interest rates. They have their own spirit animal that guides them in their direction they go. And particularly this summer and early fall, it was scary to see rates moving still higher without the Fed really doing anything at the time.
Yeah.
But thankfully, that run seems to be over. We're now off peak to start the new year. We're not expecting much relief, but hopefully the end of that cycle is behind us.
Right. And now they are talking about maybe by the summer of 2024, rates starting to come back down, right?
That's right. I think we can look forward to in the second half of the year some relief, but probably at most a percentage point. So it's still going to keep affordability, front and center in terms of limiting what's possible in the market.
At least it's going in the right direction for us. So what surprised you the most between how the year started and how the year ended?
Well, it really wasn't a surprise. Like I mentioned, I think the movement in interest rates was probably the single biggest surprise. So it made affordability worse, and it sort of postponed what we thought would happen in the second half of the year. But it was sort of a tale of two stories when you look for differences in the first half and the second half. The first half was clearly the new vehicle market strength. Margins were stronger, incentives were not quite as high then, and demand, we still had some pent-up demand driving a lot of the activity. So dealers were selling the vehicles they got, and we didn't have any build up in supply. Meanwhile, the used vehicle market had an awful spring. We continued declines that were double digit in 2022 and into the first half of 2023. But I would say momentum started to shift in the back half of the year. I think affordability actually started to improve, and that started to bring some people into the used market because prices were coming down, even with interest rates moving a little bit higher. You had people employed, you had people making good wage gains, and prices coming down really started to change the affordability dynamic in used. And then the opposite sort of became true in the new market. We suddenly had more deliveries that were outpacing the demand. Supply started to build, and that meant price pressure was back. So I think dealers really saw their strength in the first half of the year, and the new market evaporate in the second half. So it seemed like we were ending 2023 with really negative momentum. But we weren't. We were basically seeing a return to some normal dynamics that we knew had to come when supply started to normalize. And I think that lays the table for what we're looking at for 2024.
Well, that does it for our show today, but we do invite you right back here tomorrow morning on CBTnews.com. Stay up to date with the most recent news and trends influencing the retail automotive industry by following us on TikTok, LinkedIn, Facebook, and X, formerly known as Twitter. I'm Shyann Malone, and on behalf of all of us at CBT News, thanks for watching, and see you next time.
CBT News, your #1 resource for auto industry news and content.